Hello, my name is Fred Wickling, and this is Discover Yourself with Fred on CMAP and Create TV. I'd like to thank both CMAP and Create TV for the opportunity to broadcast in their communities. On today's show, you'll be discovering probate. Now, I just want to start talking about probate. I've been doing real estate this year for 40 years, and the reason why I want to talk about probate because I have a lot of people that are passing away, and people are calling me and they go, well, I'd like to sell the house. And I go, well, you can't because you got to go to probate. So I want to talk about probate. What does probate mean? We're all going to experience probate, and it's something that we don't realize, and I figure that it's better to talk about it now and to explain to you what it is so that you can prevent having to go to probate. You can avoid going to probate. So what is probate? So probate is a legal process that takes place when somebody dies. So when somebody passes away, probate takes over. So it's your business life after you pass away. That's what probate is. So you have to prove to the court that the person is deceased and identify the property that the person owns. And then the property has to be appraised. And then you got to figure out what kind of money is owed to creditors, hospital people, and so forth. And then the big thing with probate is the state of California wants to get their taxes. So that's the other reason for having probate. And so the other thing with probate is you got to distribute the remaining assets, the furniture, the goods. So, and what happens if there's no heirs? The property goes to the state of California. So when is probate really necessary? So probate is necessary when a person dies and there's no will, or there's no assets, or if the assets are less than $150,000. So if you have somebody who has assets that passes away, and the assets are worth less than $150,000, then you don't have to go to probate. But now if they own real estate, then you'd have to go to probate. So one of the things that we're talking about probate is to avoid probate. So we want to avoid probate like you want to. When is probate necessary? Okay, so again, is when you don't have more than or less than $150,000 worth of assets, and you can just go through the courts and just get one little document. It's called an affidavit for a collection of personal property. So if you have somebody pass away, doesn't have a lot of assets, you can just get this affidavit. And what that means is that when a person passes away, most people, you can't get to their bank account. And that's happened to me. My good friend passed away a couple years ago, and he was a smart man, and he knew real estate, but he didn't get his paperwork together. And this is what this is all about, for everybody to get their paperwork together. So my friend passes away, and nobody can get to the bank account. His business is still going, he's got bills to pay, and nobody can get to it. So because he had a lot of assets, now he has to go to probate. And everything is tied up, and it takes a whole year. Luckily, he had a lot of assets. His house was paid free and clear, and he had income coming in from the Veterans Administration. But, I haven't heard the rest of the story, but I know there was a battle with the family over assets because he has any will. And so what I'm suggesting is simply putting your paperwork together, and you can go online, you can research it, but you got to have a will, and if you own real estate, I suggest you have a trust. So you either got to have a will or trust, and most people don't. And it's a simple thing to do. Everybody puts that off. And here's a good thing, Jeff, and we just saw on television, my wife told me on the news that Prince passed away, and I understand that he didn't have a will.
No will.
No will. So you can imagine that his stuff is going to be tied up in the courts for years. Now, had he had a trust, a document, and I happen to have one here. The reason why I know so much about this, Jeff, because when my dad passed away, I went with him to the attorneys ahead of time, and we created a living trust. And this is what a trust really is. It's a piece of paper here. This is the whole trust right here. And what that trust does, it spells out when my dad passed away, who's going to handle his affairs, who's going to take care of the bank account, who's going to take care of my mother, who's going to take care of the house, who's going to take care of the asset, and it spelled it all out. So when my dad passed away, I didn't have to go through court, and that was a real wonderful experience. And the taxes are delayed, and it was just a nice experience. So that's when I learned about trust. And because when I do real estate, clients, when they say, hey, you know, my mom passed away, my dad passed away, I don't want to sell the house, and now they can't sell the house because now it has to go to probate. So I've learned it over the year. So that's why I'm talking about it, because it's happening more and more to people that I know, and it's a simple thing. If you get a trust, then your life is easy. If you don't have a trust, you got to go to probate, and it's a hassle, okay? So the basic definition of a probate is that it's a legal process to transfer assets like your car, your stock, your bonds, your boats from the deceased person to his estate so it can be distributed to their heirs. And that's what probate really is. It's a distribution of your property, okay? So now there's two really important things to remember with probate. So you got real estate, that's real property, and personal property. So right now, I want to talk about real estate. So if you own a home and you're listening to this, you know, you have to check. Most of you don't know how you have taken title. But I can really check real easy. You know, you can call me, or you can check with your local realtor, or check with the title company. It's public record, you know, how you've vested title. So you can own your real estate either by yourself or with somebody. So we call real estate co-owned interest. And most of the time, the simple thing is, you know, a husband and wife, they take title what's called as community property, okay? Then the other thing that I've learned, if you and I, Jeff, were to buy property together, and if we didn't want to avoid probate, if we wanted to avoid probate, we can take title what we call in joint tenancy. And husband and wife do that too, or brothers and sisters can do that. Family members do that. And what happens when you pass away, that property just goes to the person that you have on your title. Now the other way to take title is tenants in common, and that is if two friends buy it, or business partners buy it. But now when one of the person passes away, the other person can't sell it, and you got to go to probate. And that's really a hassle, and that's, again, why you have to put this stuff in trust. Then the other one is a holding title in trust, which is the way to go. In a living trust, or sometimes it's called the irrevocable trust, is something you set up. And again, Jeff, I want you to know I'm not an attorney, and I'm telling you these things because you should consult an attorney, get legal advice, what you should do because of your personal assets and your personal situation. So this is just more for information that you can avoid.
So people can discover it on their own.
Yeah, this is all about discovering
Right.
the process. You know, I've discovered it,
Right.
and I'm seeing people have to discover it, but you know what? The discovery process is so much easier if you know what is coming ahead of time than when it's so much more expensive that when a person dies and now you have to react instead of being proactive.
Not to mention the emotional part.
Yeah, the emotional part, yeah. And with trust, I mean, you have emotional part, but not emotional business part, just emotional only. Yeah, it's a sweet process. And then the other thing is community property with right survivorship. And again, I may be going fast on this, but because it's recorded, you can go back and listen to this. And again, research it for yourself or give us a call. So we talked about the basic real estate. Now, there's a process. I want to talk about the process, about, you know, real estate process. Like I said, it's about a year process, okay? So the first thing that happens, it takes place where a person passes away. And that's also troublesome because, say, for example, I know your mom lives in a different state. And if she were to pass away, if you were to handle her affairs, that means you have to travel to Ohio.
Florida.
Florida, where she is. Okay,
Right.
yeah. But, and it depends, and this is the interesting thing. She lives in Florida, but hypothetically, if she had assets in Ohio, now you have to have probate in two states.
Yeah.
And it happens too. So that's,
Right.
that's interesting. So the county is very important. Wherever the person dies, that's where, you know, because that's where they have the death certificate, and that's where the county recording is, and that's where probate takes place, okay? And so probate, you know, oversees the settlement of the estate, okay? And it also, what probate does, it validates the terms of the will. These are my last, wills that I want carried out. And so the court oversees that process, that will's taken care of, okay? And the other thing, the reason why we have probate, because we want to make sure that the creditors get paid. All the creditors come forth, and, there's actually a process where when somebody passes away, you have to give notice, and we'll talk about that in a minute, okay? And then the rest of the process is that once the creditors have paid and we have figured out who the heirs are and we figured out who the taxes are paid, then the remaining is distributed to the heirs, and that's the end of probate. So that's the process, okay? Then the other thing we have to know about the process, Jeff, is that, all this information, when you have probate, it becomes public record. So if you have a trust and you don't want your stuff, laundried out in public, you have a trust, it doesn't become public record. And so, and here again, we use a slogan, the rich get richer and the poor get poorer. Rich people, they have trust. And that's to avoid, one of the reasons to have a trust is to avoid or delay taxes. And I think delayed is probably more reason. But let's talk about the key players in a trust. Who are the key players? So one of the major key players would be the personal representative. It always happens when somebody passes away. It's usually a brother or sister, a mother, father that handles it. So that's the key player. And we call that the personal representative. And when there's a trust, it's definitely called the personal representative. When there's no will, we call it the administrator or the executor or the executive, okay? Executrix. That's a tricky word to say, executrix, okay? And then you have the other person you have is the probate clerk at the county recorder's office. That's the person that files your paperwork with the county. And then normally you get an attorney, but the attorney's not necessary. There's a company called Nolo Press. You can look it up on the internet. They will walk you through how to do a probate by yourself. And in all the years I've experienced, I've only had one young lady that did a probate for her mother, and she had the guidance because her friend happened to be an attorney. But I recommend using an attorney. I would use an attorney because there's steps. If you use an attorney, most of the time, 90% of the time, it's going to be done right. So that's why I would suggest using an attorney. And then you have the heirs. So those are the players in a transaction. Okay. And then the judge also that oversees it, and that's the courts. So how does probate start? So probate starts when somebody dies. And it doesn't really start when somebody dies. It starts when you have to either sell the property or distribute the property, or you want to get the money out of the accounts. That's when it starts. And you'll find out really quickly if your aunt and uncle or mother, father, brother, sister had major money in the account, you can't get it out because it's tied up in the bank. And so that's how probate starts. Okay? You want to just take a break for a second? How does probate start? Well, the way probate starts, number one, you have to have somebody that's passed away. But it doesn't necessarily mean that probate starts, because a lot of times, say, if mom and dad passed away, dad's still in the house, and dad's in, life goes on, and, they don't need to sell the house, and there's plenty of money in the family, then nothing happens. But so a person dying doesn't necessarily start probate. It's when people, either when their bank accounts are frozen or they want to sell the house, that's usually when they figure they need to do probate. And it usually catches people by surprise. And that's the whole reason why we're saying is, if you get a trust, then you won't have that surprises. But somebody has to die first of all, okay? And then the person, they die either with a will, and that's called dying with testate. That means you have a will. But you can also die without a will, okay? But if you have a will, usually you appoint, some family member to handle it, and that's called either, if it's a male, it's called an executor, and if it's a female, it's called an executrix, okay? And that person files, with an attorney. They go to the county, and they say, I want to open up probate, okay? Now, if there's not a will, then it's called intestate. And a lot of people don't have any wills. And so if there's no will, then the court assigns what's called an administrator or an administratrix. And then they are appointed and they are told, to handle the steps in the probate. Okay. Now, what's really interesting, Jeff, if there's nobody there to claim an asset, if there's no probate, and if that money sits there like for 3 years or 5 years, depending on the state it is, did you know that money goes automatically to that state where it goes to?
I did not know that.
Yeah. It's called escheat. And it's kind of the way you spell it, it's like it's escheat, so like escheat. You don't want to get escheated.
I've seen that word.
Yeah, you don't want to get escheated. So that's, so that's how it starts. So what I want to talk about, the flow of events, of a probate. So you're put in charge. Somebody passes away. What do you do? Okay. So the first thing is, you try to find if there's a will. Okay. And I think my suggestion, the reason why we're doing this is for those people that are watching is you should set aside to do these things. So if you haven't, create a will. And in that will, it should have all the instructions. What member of your family is going to take care of this. You may want to divide it up. You may have a bunch of brothers and sisters. One sells the house, one sells the cars, or one gets the house, one gets the car. Whatever spelled out. Interesting thing, Jeff, my wife's friend passed away, a single woman, and when she passed away, she had a trust that nobody knew about, but in the trust it spelled out how that was going to handle. 2 women got the home. She had all the assets in the house, and this lady, she bought custom jewelry, and she just kept it in box. She was a custom jewelry hoarder, and she had enough jewelry to open up a jewelry store.
Wow.
Yeah, and so my friend, the person that handled it called her and said, hey, guess what? The will says that you get part of this inheritance, and it's part of a trust, and so that was interesting. So this is also important to safeguard your assets. If you don't do that, what happens is if you have to go to probate, automatically the attorneys get paid and their fees are set by the courts. And then the other thing is, if you don't protect your assets, what's going to happen is you're going to get taxed on that. And that's why we have probate. So again, we talk about avoiding probate. So what happens is you and the attorney, once you file with the clerk, and it's usually like $400, you file with the clerk and you petition the court to open up probate so that somebody can handle the will of the deceased. And so part of that process is that now you have to notify all the family members. And then you have to put a notice in the newspaper. And that has to run. So that's part of the process. And in the meantime, the bill collectors, did you know that bill collectors have people on staff and all they do all day long is look at the public records to see who passed away. And then they compare it with their accounts. And if they notice that John Doe passed away, then automatically they go to probate and says, I want money, you're smiling, you got a story to tell.
No, I don't. Just time to start collecting is what
Yeah,
you're saying.
yeah. And again, if you have a trust, you bypass that. But so that's what that's for. So they notice all the creditors, all the doctors, and that process takes time, and it takes time, and we'll talk about the timeline, okay? And the person, what they have to do is they have to make a list of all the assets. And then not only when you have to make a list of all the assets, you should get a good valuation of the assets. How'd you come up with it? How do you know this diamond ring is worth $10,000? Well, I got paperwork to prove it. Or we had, the jewelry place, figure out what the value is. So that's one of the things. Okay, and then the other thing that the executor needs to do is make sure that the taxes are prepared, because there's a taxes. It's like how much is taxed. How much is the total value of the estate, and then how much is the taxes are owed on that estate, and that's one of the reasons why you go to probate, okay? Then once all the claims are settled, then whatever's left over, then it's distributed to the heirs. And I want to say something which is really interesting, that we also have in probate, there's a chance that heirs, if there's a lot of money, like in Prince's situation, Prince say, his assets, estate's worth, I heard, from, 100 million to 200 million to $1 billion, whatever his estate's worth, right? So say that he has, family members that are going to college and they need their money, and this thing is going to be tied in probate for years, right? So in probate, there's a process where if you're one of the heirs and you're going to get 10% of the, the whole estate, and so we know it's at least going to be at least $1 million that you're going to get, right? Well, people can lend you money on that and get, say maybe 20% of that $1 million you can get, which would be $200,000, and that will pay for your tuition, your car, your books, and everything else, and that's, you can get that. So that's a process, part of probate that people are not aware of, and I think it's a really good thing. So that's the whole process of selling the estate. So what I want to do now is go to the next slide right here, and it talks about the timeline. And I think I'm going to spend the rest of this section talking about the timeline of a probate and kind of read from the sheet, so you'll know that, again, the reason I'm trying to do is get you to be tired of listening to all what you have to go through, and then figure out that if you're tired of going through this process, that you probably start a trust that you don't have to do this. A trust is so much faster in this time, and so we're talking about, we're looking at this sheet right here.
So
we're
this is a timeline for a probate.
Yeah, timeline for a probate. And we're talking between 1 to 2 months to 18 months, okay? And what I find out, I've got several people that I gone to probate in San Francisco, and those courts are filled up, up to 2 years in probate. They're just tied up, and your money's tied up. So again, the message is, take care of the paperwork. So prepare and file the petition. That takes about 2 months. You got to sit down with the attorney, and just imagine this. Again, we talked about your mother being in Florida, right? Mm-hmm. So imagine you've got a busy schedule. Now you and your brother and whoever's left have to take care of this and deal with the people in Florida. I mean, do you take off and fly? It gets pretty expensive,
Oh, yeah.
Yeah, And so then you got to go to a court hearing. So after you put all the paperwork, then you got to go to a hearing. Okay, and that's the big thing everybody waits for. And the court hearing, the judge makes a decision. Jeff, can your brother handle this? What kind of education do you have? Have you been to jail? For embezzlement? They kind of do a thorough check with you. And if you do pass and they do grant you, then you can handle it. But again, what people don't know about that, a lot of times the administrators and the executors, they're under the court order. And if there's any hanky-panky going on with things disappearing, that's an accountability. So make sure if you're going to be an executor or an executrix or an administrator, that you abide the rules of the court, because if not, you're going to get your hand slapped. Okay? Okay? So once the court, you got into the process, you petition the courts, they give you what's called the letters of administrations or the orders of probate and the duties and liabilities, and sometimes they ask you to issue a bond, to make sure that, that you don't abscond with the money. You think about it, if you are in charge of handling Prince's assets, I would take out a bond because, what if that guitar disappears? Who's liable for that? Mm-hmm. So you got to have that protection. So, and then the judge will tell you that, either you can handle all of it or they assign different people to handle it. And especially when there's disputes. I tell people, and that's why you should have your paperwork in order, because how often do you hear that family members dispute because no, Uncle said I could have the car, and they said no, I could have the car, but
Happens all the time.
it happens all the time. So that's why you have to have, all the paperwork in order, and that's what the letters of testamentary says, and that's why you have to have your will in order, okay? And so the first thing that happens, after like 4 months of this process now, once you got the paperwork in order, now they send the letters to the creditors. They got to put a notice in a local newspaper, and they got to run it. There's rules on how they can run it for 7 days, and you got to pay for it. Okay. Then you got to put a notice to the Department of Health Services. Do that, and then if you're on Social Security, Medicare, they also have to be notified, because a lot of people don't know if you have insurance and you're getting medical benefits, that if you have assets, some of that has to be reimbursed. And a lot of people are not aware of that, and that's why, again, it's really important that you put your trust in order, because sometimes people think, well, I'm getting $1 million, and because of the time and the trust, all that money's eaten up. There's a lot of people, they get their hands in there, okay? So then you have to determine, are those creditors valid or not? Somebody comes and says, yeah, Uncle Joe, owed me, $20,000.
Coming out of the woodwork.
Yeah, everybody.
That guy owes me money.
Well, I remember Howard Hughes when he passed away. I don't ever think his probate ever closed.
He still owes me money.
Yeah, because they had all kinds of family members, charlatans, fakers come out, have claims on his estate. So that's interesting. Once you do that, and the creditors make their claims, and if there's plenty of money, there's a possibility, that some of the assets can be distributed early, especially when they sell a house. And what I want to tell people too that's really important, so in probate, I told you it took a long time to do this stuff, but if the judge says, you can sell the real estate, then that you don't have to wait for the court's permission. So sometimes real estate is sold and you have to have the court's permission to do everything. So you get the contract and the courts need to see it. They need to approve it. Sometimes you don't need the court approval. And so that's really important that you understand that with real estate. So, and the reason why I show that, because, say that you have doctor's bills of $200,000 or $300,000 and you have $1 million worth of assets in your house, you can sell the house and you can pay the creditors off, you can pay the IRS off, because while you're not paying them off, guess what happened? Interest is accruing. Mm-hmm. And a lot of times, your whole estate, and the attorney sits there, oh yeah, Jeff, the estate got billed for another $1,000, and the clock ticks. So it's important that you recognize that, okay? The State of California Franchise Tax Board is noticed, the IRS is noticed, and then we have to wait. We have to wait, okay? And then once the IRS is noticed and we find out what all the assets are worth and what we're going to sell, or what we sold, then the IRS, they hear this is what it says: receive a final tax letter, and it states how much you owe. Okay, so that has to come out. So before you close that probate, that's got to get paid. Okay, and then so once the federal government, the state government got their money, and then some of the heirs, then you can petition the court to close this. So then when you close it, then you distribute to the heirs, and then you have a final discharge. So, I said a lot, and that's what the process is, but I didn't talk about the emotions of the family, and again, my pleas to everybody is to do your paperwork, get your house in order, and do your will. Do it now. I mean, you can save thousands of dollars, thousands of heartaches, thousands of people not speaking to each other by just taking care of them. So that was the probate timeline. Okay, so now, I know I said a lot, and this is not meant for you to get a whole course on probate. It's just meant for you to be aware and to take care of your business now. That's what it's really about. But the other thing is, what I want to mention is, Jeff, for those people that, it's too late in the game, where right now they're in a situation where something happened. And the reason why I'm doing this too, because we just got a call from a family member, same thing happened. Somebody passed away with a will. They want to transfer assets, and I told them you can't do it. And that's why I said, Jeff, we need to have the segment. But the other thing is that for those people that are in this situation, Since I got licensed as a probate specialist in real estate, I joined an organization, what I want to mention to you, and that's called the U.S. Probate Services. And the U.S. Probate Services, they're all over the United States, and what they do is they provide a service to give you people in your area that either help you liquidate the property, either you need an attorney, you need a cleaning person. I mean, the house I was just in Sacramento the other day, it was a mess. They had to get a dumpster out there. So there's all kinds of related services. So for today's segment, if you go to U.S. Probate Services, you can see all the things that are available to you. So I want to just do a plug for U.S. Probate Services. I'm happy to be on there, and it's good information. So with that being said, would you want to say something?
Well, I just have a question, or just to make a comment. So, let's say that someone takes money, transfers it without going through probate. That's illegal, and so they would be responsible for that money or whatever they took. Is that correct? I'm just curious.
Yeah, well, good question. There's a lot of variables with that, Jeff. And so let's take the variable if your name was an account, say with your mom, and something happened with your mom, you have a legal right to go to that account, right? Now, what normally happens is if you're not on your mom's account and something happened to your mom and you want to get money in the account, you can't get it unless you got her checkbook and forged your name, right?
Right.
Yeah.
That's illegal.
Yeah, that's illegal. Yeah, and that's yeah.
But he uses checks now.
Yeah, well, I still have some checks.
Yeah, I do too. But I'm just saying, yeah, it would be like say a check and cash card.
Yeah, well, check and cash card. But what if you had your
illegal.
mom's? Yeah. Well, what if you had your mom's debit card or credit card?
Right. That's what I'm saying.
And you knew the passwords.
Right.
And technically, here's a legal question too. You asked me if that's illegal, right? Is it legal? I mean, I'm not an attorney, because here's the question. What if you're the only heir and you had a right to it? And what if you took the money to pay her PG&E bill because you had food in the freezer?
And that's good, and that would all come out in probate, but that's something you'd have to go through probate to.
Yeah. And it's kind of funny the word probate, because I've been thinking about it. Probate, this means you really got to probe a person's life. Mm-hmm. And if you have a trust, you can trust in it that everything is done. But anything, joking on the trust too. So here's important. Trusts have a catch-all thing, if something is not in a trust. But here's an example. I understood that when Steve Jobs passed away, a lot of stuff was in trust. But apparently he had millions somewhere else, and that wasn't in a trust. Mm. So you can have things in a trust, and you can have a catch-all, but if you don't have that catch-all, then that's out of trust. So, like I said, trusts are tricky. Yeah, they're really tricky. So.
And that's why people need to talk to a lawyer.
You need to talk to an attorney, or you need to research it. Matter of fact, based on this, I'm sure we're going to have more segments on this, Jeff, because I literally told myself to get a book, and there was a book that I looked up last night. And one of the things is the California Code. There's a code that you can buy for like $55. And I'm determined to get that, because more and more, my whole reason for doing these messages is to save people money and headaches and time. I mean, I discovered this, and people discovered things too late. I mean, why do you want to discover this when somebody passed away? So being the fact that we're near the end of our segment, I would like to suggest that you go to my website, which is www.discpeople. That's DISC people .com. And or you can go, on your computer or on your phone, you can do this. And when you do that, what I'd like you to do is, when you get to that website, just click on and become a member. It's absolutely free. www.discpeople.com. It's absolutely free. And as a member, you'll discover not only tips like this that we have, but all these segments that we taped before. We'll have inspirational messages, motivational messages, life-changing messages. And And you'll find out things about yourself that you're not aware of. And that's what Discovery with Self with Fred's all about. You know, things that you're not aware of. You know, like, you know, did you think about your left ear? When's the last time you thought about your left ear or your right toe, you know? You forgot about those things, you know? So if you have any questions about today's program or comments about our show, please call me at 408-813-6609. That's 408-813-6609 to speak with me, Fred Wickling. You can also find me on Facebook, Twitter, LinkedIn, and YouTube. Especially YouTube, become a member of my YouTube to sign in, okay? This has been Discover Yourself with Fred. And remember, always be better to yourself than you have been.